Welcome to Mortgage Talk with me and Jeff Mudrick. Each month we share what is happening in both the real estate and the mortgage industries. We also dive deep into a topic in which everybody wants answers to and that we're being asked constantly. So our goal is to bring you value and to essentially just share our expert insight so that you can make amazing and great real estate decisions. So we've had another increase in interest rate since we've talked last. Hopefully this is not a trend that continues.
Like every time we talk, this is topic of conversation. Yeah.
But yeah, so I guess you want to share maybe what's happened in the last month?
Yeah, sure. Sounds good. So yeah, as last week, October 26th, last Wednesday, we had a Bank of Canada announcement. They announced a 0.5% increase to the overnight lending rate, which we're at like a 3.5% increase overall this year, which is something we haven't seen in many years and decades. So it's hurting a lot of people. It kind of impacts affordability. It impacts for those who are wanting to buy. It impacts those who currently own a home. It's the silver lining, I guess we can say, is that it is less than what most experts anticipated. Everyone was kind of bracing for a 0.75% increase. So coming in at a 0.5%, it potentially, depending on how we're looking at it, I'm more of a glass half full type of person. So I see that as some good news. Mm-hmm. And we have one more announcement this year. So let's see, we're kind of playing the waiting game and seeing what they're going to do with that last announcement.
Now, are these announcements, this is just a random question, but are these announcements scheduled? Like, do you know when they're going to be every month or whatever? Or every
year?
So
they is 8 times a year. So it's like March or January 27th, March 2nd. It's going to different every year, but yeah, we know exactly when they're going to be. They can technically change rates 8 times a year, whether it's increasing them or decreasing them.
Right.
This year is kind of that 1 year when they decide to raise them all. Exactly. Yeah. So we do know when those are. And so that's why we can kind of anticipate where the market is and where it's likely going to go.
Yeah. And that's good to know. And I think too, if we can help remind people when these announcements are going to be, they can sort of plan accordingly, because anybody that is in a rate hold or something, they may want to take advantage before that, essentially expires, right?
Yeah. That's such a good point. I've had a lot of clients reach out to say, hey, we have a variable rate hold expiring whenever. But the real important thing is if we do want to capitalize on that rate, with certain lenders, they offer like that static variable payment. And if we do want to lock in that payment, properties have to close prior to the next rate announcement.
Right.
So so for example, if somebody were to buy today, the next announcement, I believe, is on December 4th.
Okay.
So somebody would have to purchase, purchase and actually close on the property before December 4th. In order to actually lock in that specific interest rate for the next 5 years.
That's good to know, because some people may think, well, I went firm on this date, we're good, but they actually have to close on.
It has to close, yeah. There are pros and cons to it. Like, we won't dive into it too much today, I don't think, but the pro is that you get to keep your monthly expenses as low as possible. However, you're kind of pushing out the amortization. So more of your monthly payment's going to go towards interest rather than principal. Whereas if you took a standard variable rate product or mortgage, then your payments are going to increase. But at the end of 5 years, you're going to have 25 years or 20 years left on your mortgage, not that extended amortization.
Right.
Cool. All the fun stuff, eh?
Yeah. It's definitely, it obviously is taking a toll on my side of the street, because like you said, affordability is being, impacted pretty significantly. And it's forcing people to be a little bit smarter, and I guess I wouldn't really say frugal, but they've just got to, be a little bit more lenient on what they're willing to, give and take sort of thing with their wish list. So
Yeah, 100%. That's what I'm noticing that too. So, you know, it's interesting right now where probably, and correct me if I'm wrong, but you know, 8 months ago, everyone's advice was to, you know, sell or buy first, or sorry, everyone's advice was to buy first and then sell.
Yeah.
Whereas, you know, I think you and I have spoken, and you know, the common trend is, hey, we got to kind of sell the property first and then
Yeah.
buy. Are you seeing that as well?
I mean, and being in this market right now, there are ways around the buy first, sell first situation where, you know, if people are accepting conditional offers, you know, you can put your house on the market, try to sell it, and then, you know, put in a conditional offer on a house that maybe does come up while you are trying to sell that, you know, is an ideal property for you, and hope that they will do, you know, will extend or allow you to do that sale buyer's property, which
Yeah.
is something that some people don't realize that you can do, which obviously you can, but it can get tricky because I always try to get my sellers to understand both sides, right? And so if it were them, you know, and they're getting this offer conditional, you have to have a strategic plan with that as well. For example, some people don't realize that you can actually have an escape clause in sale buyer property condition where it's 24, 48, 72 hours, whatever. On the seller's side of things, you want that number, that hour to be low as possible. From a buyer standpoint, you want it to be as long as they'll let you, so you can wrap that deal up and have enough time to, you know, get your things in order that you need in order to secure the deal. So
And
there's
these are all,
definitely ways
yeah,
around.
I was going to say, sorry, these are all things that, again, over the past however many years, they have not been around. You know, these
Right.
escape clauses, even condition of finance, home inspection, all these fun, you know, things that you can help, either being a buyer or a seller, can help you either get the house at the lowest price or trying to maximize your profits. They haven't been
Mhm.
around. So now that they're back, there's so many like amazing opportunities for
Yeah.
to kind of use these tips and techniques. I just worked on a file with an escape clause, and it was, you know, it was very helpful for the buyers that I was working with. Anyways, yeah, all these things are back.
Yeah.
Who knows for how long, but they're back for now.
Yeah, which is it. I mean, there's good and bad in all situations and in all scenarios, but I do think that it's allowing buyers the time to do their due diligence, and it's allowing them to make good decisions. You know, where there are people right now that maybe are not in the best scenarios and situations, and you know, maybe they're being regretful right now in the last from purchases in the last 24 months or so. So. That's what I love about our conversations is maybe, you know, someone takes that golden nugget from us and they're like, you know what? We're just gonna wait, or now maybe is the right time for us, and you know, to talk to their realtor or whatever, because everybody's situation is different, and it really is a catered plan to each individual person, couple, whatever. And I think it's really important that people realize that even though on a macro level, everybody's saying, you know, the market is crappy and it's not a good time for anything, but for some people, it is actually a good time. So,
100%. Yeah. So like, I'll just say a quick story. So, recently I've had a couple, you know, we're working with a couple for a while who is kind of the couple who says, hey, we're just going to wait for the market to crash. Um, and you know, I've been talking to them for over a year now, waiting for the market to crash, waiting for the market to crash. So the market is essentially, it hasn't crashed, but you know, it's come to a, like at least a halt, or in some cases
slow
it's chopped
down.
down
Yeah.
quite a bit.
Rates are
Yeah.
on.
Yeah. I don't want to say the C word, the crash
Yeah.
word, but anyways, so they're waiting and waiting. The market crashed, they're super thrilled, and then we walk through what their monthly payments are looking like, and they're like, wait, but I thought the market crashed. I'm like, yeah, it did, but here's why. You know, it's
Yeah.
because of these rising interest rates. It's because of inflation, which
Mhm.
essentially means that, you know, whether or not you bought 6 months ago or 2 years ago when the prices were kind of a lot higher and the interest rates were lower, right now prices are lower, interest rates are higher. So your monthly payments essentially the exact same, give or take a few dollars a month.
Right.
However, the biggest benefit to those buying today is that because the housing prices have dropped, the minimum down payment has dropped, land transfer taxes have dropped, and the most important thing is that interest rates will eventually come down again.
Yep.
So I'm sure you've heard this before, but I've said it a lot of times over the past week is, you really do marry the purchase price. That's
Right.
going to stay with you forever, and you date that interest rate.
Yeah.
That's kind of been a very popular saying in 2022.
Yes. Now you said land transfer fees dropped. How often does that happen?
It's just, so land transfer tax is just based on a percentage of the purchase price. So if the purchase price, just like down payment too. So if the purchase price drops, that means land transfer is going to drop and down payment is going to drop as well.
Okay, perfect. So is there a standard like minimum right now because I do get asked this a lot, and sometimes I don't know if things have changed, so I don't know how to answer the question, and usually I just send them off to yourself or somebody else and saying like, so is 5% still a minimum, or is that something of the past? Like,
no, that's still around. Yeah, for certain situations, 5% as a down payment is the minimum. To give like let's try to make this as client friendly as possible. But if you purchase up to $500,000, so anything under $500,000, you can put 5% down. So if you buy a $500,000 property, the minimum down payment required is $25,000.
Okay.
If you purchase a property at $700,000, then it's 5% of the first $500,000, and then 10% of the difference.
Okay.
So it's 5% of $500,000, which is $25,000. And then 10% on that additional $200,000, which is $20,000. So the minimum down payment for a $700,000 property is $45,000.
Right.
So it's going to be a little bit more than 5%.
Right. That's really good information, because a lot of people probably don't know that. And it's, valuable to know what you need in order to move forward with your purchase. A lot of people, they think, well, the minimum payment's 5%. They don't think about, any.
Every week, Michelle, that example I just gave gets said directly to a client, because a lot of people think, oh, I got 5%. Like, well, it's great if you're purchasing at or under 500,000.
Right.
A little bit more.
Right.
Yeah.
Very good information. So is there anything that buyers or sellers should be doing right now, kind of in the sense of like homework, should they be doing right now in order to be, successful in the next time period before they decide to make another investment of some kind? Hopefully
For sure. Yeah, I think that's a great question. I think, the great part about being a buyer right now is that once you do one pre-approval, or once you kind of get all your documents together, give them to a mortgage professional, they'll have that information for the next long while. So if rates go up or down, your mortgage broker or professional should be contacting you to update you on affordability. So as long as you have done that initial kind of the hard part, the half hour, 45 minutes of homework on your end, it should be, it's kind of out of your control. It's all in the mortgage broker's hands to make sure you're updated with the current budget, current affordability, to make sure essentially down to the penny what you can afford based on the different interest rates.
Right.
So if you are already pre-approved, if you're pre-approved with a fixed rate, nothing to worry about. That pre-approval is still valid. If you're pre-approved with a variable rate, that is going to need to be adjusted, and affordability will likely decrease by somewhere around like 5 to 6%.
Okay. Well, that's good. And I think if we can get on track with maybe doing that on a regular basis, is giving people homework, it's something they can actually take and go, okay, this is something I need to do. And we're helping them kind of be more successful in their journey because they're making good decisions. And obviously we're not going to give them bad advice. So
I again, these weekly conversations I have are about that homework. So it's very important. If anyone gives you a number, if you're looking to purchase a property or if you're looking to sell and buy another one, if someone gives you like a random number and says, hey, this is what you can afford, hey, this is the interest rate you're going to get, it's the same as like going online and inputting any information. Until someone sees actual documents, that the number that they provide is
not really valid.
not worth the email that it's written on. So
yeah, yeah. Okay. And just another quick, because there are still some properties that are going into multiples. I mean, it's a very rare occasion, it seems now, compared to what it was. Is there, I mean, on your side of things, I know you've been really thoughtful in being able to, I think record a video and kind of vouch for your buyers, which is very kind of outside of the box and kind of above and beyond, which is amazing. Is there something like paper-wise that you're able to provide your buyers with to kind of accompany their offers?
yeah, 100%. So with any client that I work with, they get they get two things. One's an option, and one they'll get in their email along with the realtor. So I send out the paper copy of a pre-approval letter with my name, my business on there. Typically, again, and you can, I'm sure, speak to this. I don't know if you've seen it on your end, but when we provide an actual pre-approval letter from a lender, it shows that maximum purchase price on there. And
Right.
really, I don't know if you want to be showing the sellers what that maximum purchase price.
Unless it's at their max and then we're proving like, look, we're at the
Exactly.
end of the string here. Like this
Yeah,
is
you could. That's a great
all
way.
we
That's a great
have.
thing. That's a great way to frame it. Like it can be advantageous for sure. So, so two things. Yeah, one, a written letter saying, hey, this person's pre-approved by a mortgage specialist or mortgage agent or mortgage broker. Second is a letter actually from the lender saying, hey, this is the max amount they can purchase at. And the third thing, like Michelle said, is I like to do these customized videos just to tell the listing agent, hey, and the buyer and the seller, sorry, hey, these buyers are good to go. No worries about them. They are pre-approved. If you have questions, let me know.
And I mean, if I'm sitting with sellers at the table with, say, 2 or 3 offers, and Joe Blow has just their offer, no description of the buyers. The second one is an offer with first-time home buyers, really love this house, and then the third is they have all of this supportive documentation plus a video from yourself supporting and backing their financial position. I mean, that just as a package just looks so professional and looks so good compared. Like the other day, for example, I received an offer, and it literally was a forwarded offer from the signed documents. It was a DocuSign forwarded email, and that was it. There was no text. There was no like, please confirm receipt of this offer. There was nothing. It was the offer and that was it. And a text message just sent you an offer. Okay, cool.
How do you deal with that?
Thank you for being so descriptive.
I imagine that's challenging to say, hey, are these serious buyers? Am I wasting my time, my seller's time? Like, what is going on here?
And the thing is like the buyers, they could be represented in a more professional manner for sure. It's just how far is your realtor willing to go to represent you to the best of their abilities. And I think that's something that is lacking in this industry right now is the professionalism and there's a lot of people in this industry that just got in the industry that's new, that doesn't really know, the actual blood, sweat, and tears that go into this industry. And so there's a lot of work involved, and the people who just want that quick fix, like they're going to get a very rude awakening soon.
Yeah.
You cannot just forward an email and like, oh,
that's a story you tell fellow realtors and everyone just laughs, or anyone in the industry laughs. But I was going to say, like, I think the way you and I connected is I just heard some amazing feedback from you or from your clients, and that's how you and I connected. And I always say the same thing. Like, there are some amazing people in this industry, on the mortgage side, on the realtor side, on the lawyer side, home inspector, all that. And there are those who are, like you said, in for the quick fix, love to make however much money over selling a couple properties a year. And if it's me, all day of the week, I'm using a reputable realtor who actually does something for me and helps not only educate me but makes my offer look a certain way and as appealing as possible.
And I mean, we're all kind of working as a package deal anyways. I mean, if I'm representing the buyers and you're funding my buyers, I mean, we're one kind of big family in this situation. So you want to make sure.
It definitely should be. Yeah.
It should be for most. I don't think it happens that way, but it definitely, and that's why, and I should have you onto the podcast for Redefining Real Estate podcast, because that's the thing. Like,
plug there, eh? Yeah, love it.
I'm having, professionals come in and talk about it, because there are really good people in this industry. And I want to, really shine a light on those people, because there are people that are doing a phenomenal job and really do take to heart like what they're doing. And there's obviously those bad apples out there that just kind of make it look bad for all of us, which is unfortunate, but
just like the same in any industry in the world is what I'm learning. Yeah. Good people and people who with one thing on their mind.
Yep. So I guess we've got some homework, which is good for everybody involved. There's another announcement happening December 4th, is it?
I believe it's the 4th. Yes.
Okay. So we'll actually be talking on Wednesday, December 14th. So we will have a discussion about whatever announcement. Hopefully it's positive. And for Christmas, everybody gets like a neutral announcement. Like, it would be great if it just didn't go up.
December 7th. Sorry, December 7th.
Wednesday,
yes. Anyways, but we'll be talking a week later, just like this time. Yeah.
Perfect. Okay. Well, I think we've hit some good points today, and we obviously appreciate everyone's time that tunes in. Tune in on December 14th, which is very close to Christmas. I cannot believe in 4 weeks we're going to be that close to Christmas.
55 days or something, 53.
I haven't even started Christmas shopping yet.
Yeah. Halloween's come and gone. We're moving on.
For sure. So 12 p.m. Eastern Standard Time, December 14th. Tune in for another talk with Mortgage Talk with me and Jeff. Thanks,
awesome.
Jeff.
Thanks, Michelle.